Welcome to TheoTrade. This is Don Kaufman. It's September 18th, 2019, and you are watching the TheoTrade evening video. There's about 9 minutes left inside of today's trading session. The S&P is down 1. You know, if you turn the screen on right now, you would think, wow, another kind of boring, even humdrum day with the S&Ps massively unchanged. Nevertheless, we've had a little bit of fallout from the double down dove Fed, who once again lowered interest rates. It was incredibly uncertain even yesterday as are they going to lower rates or not lower rates. Then in the last day, a funding issue occurred inside of the repo markets, and most traders, including myself, I went from the camp of there's no way they're going to cut rates to literally the last 24 hours. I'm like, oh, they're going to cut rates now because we've got short-term funding issues. Nevertheless, the reaction of the markets, I can't say that this is a muted reaction to the markets because it's not. Yeah, the S&Ps were down, and all of a sudden the S&Ps were down almost 24 points before staging a rally back. But at this point in time, we're stagnating, and anything in the next 24 to 48 hours of trade is possible. There's a couple of, I think, really big issues right now on the screen, one of which is the bond market. Well, again, it's seen some pretty wild volatility after the Fed. Again, I got to look at that on an intraday basis just to, behold. The Fed comes out, we're trading almost 161 again. We take off to the downside, 159, and, in a few ticks, rip back up. It's been all over the place. But the big takeaway from the bond market, it's still up today. All right, the bonds are still effectively higher today, and you have to sit here and kind of wonder, is this the beginning of another move back to the upside? And if it is a move back to the upside, okay, that should take apart the financials at the seams, telling you this is the market to focus on right now. It's the financials. It's all about the financials. It's been about the financials. This latest rally in the S&P is all about the financials, okay? The financials, and if you take a quick glance on a kind of a day-to-day basis, they're still projecting. Get this, and this is the part that has me kind of guessing over here. These financials, the Fed just came out. They said what they had to say. Jerome Powell answered Q&A. By the way, he looked and sounded incredibly nervous today. Almost in answering some of the Q&A, it almost sounded like he was reading those particular answers. Again, highly guarded stance. But the point that I'm trying to make, over here, the expected move with what? You just got Thursday and Friday this week. Why is it still at 44 cents? It's like the news came out, the market saw the news and was like, yeah, but the real news hasn't come out yet. And that's where I'm kind of left in a little bit of a lurch over here. The bonds feel the exact same way. And when I start looking towards the bottom of the screen, I look at the VVIX. That's the volatility of the volatility index. And it is, it's down a little bit from some of the peak today. By the way, it only peaked out, just before the Fed kind of picked up again after the Fed. Nevertheless, the VVIX is still at 100, which is saying that after this marketplace, it saw quite a bit of risk today, didn't it? Right? The S&Ps, look at the range in the S&Ps. They traded all the way down to 2980, all the way up to, 3010. You got a 30-point range in the S&Ps, and we've rallied back. The volatility will not abate. So at this point in time, we're still in a very tense kind of holding pattern. When I say tense, I mean just that. You're sitting there kind of, pins and needles, like, wait a second, there's another shoe to kind of drop inside of this marketplace. And what we're going to be looking at here momentarily, and something I want to be extraordinarily mindful of, is inside of the S&Ps. And again, I'm going to stress this time, and time again in the SPX. The SPX, is an options-only product, right? Don't worry about any of the quotes right now. Don't worry about any of the charts. It's an options-only product. And inside of the SPX, each week we are afforded to look at that option market a week out. And if you looked at the options market this week, it gave you just over about a 40-point move. Now, this is something I've been mentioning just incessantly, day in, day out. week in, week out, especially on the weekend videos. Okay, and you got to realize it's expecting a $40 move. Again, a $40 move either higher or a $40 move lower. And yet right now, we're pretty much where the week started. I mean, we're pretty much spot on where the week started. So you're like, okay, so what does that leave us? It leaves us, okay, with the anticipation of almost a 40-point move on just Thursday or Friday of this week. It's get ready to rumble is what I'm saying inside of the S&Ps for the remainder of the week. All right, there is volatility out there in their marketplace. Again, even though we've got volatility futures down, we got the VIX down, but the VIX is down negligibly. Like if you looked at the VIX, and yeah, the S&Ps are flat, but if you looked at the VIX, you wouldn't have succumbed to the idea that we just had and passed through one of the most hotly debated FOMC announcements in recent history. Nobody can believe, like, they cut again. Yeah, they cut again. And the marketplace sighed and just keeps right on going. And again, the VVIX, the exact same thing. A 100 VVIX is still indicative of firms. It's like, keep your hedges on. We saw the news. Doesn't matter. Keep your hedges on is what this marketplace is effectively saying. Last thing I want to cover here is really just one individual stock to display, if you will, the power, okay, of the spread. There's something we talk about extensively here at TheoTrade. They're called in-out spreads. I've had an in-out spread for quite some time on a underlying called Roku. I think everybody's kind of familiar with Roku. Roku had some rough news today. The stock actually traded down some 13%. Nevertheless, the point that I want to make is I put on a bearish trade. Again, a bearish trade. And that bearish trade was actually put on back right here. Okay, specifically, okay, right in this neighborhood here. And that bearish trade has not worked at all. I mean, this thing rallied against me. The pain, the agony. Listen, it's a defined risk trade. And this just goes to show you the power of the defined risk trade. Okay, albeit in what? A couple of trading sessions, boom, we're right back. You don't get stopped out. Again, define your risk, because tell you what, this is a trade that was dying on the vine. It has now turned around not only to be profitable, but fully profitable above and beyond any expectations of profitability because of the ability to sustain that position long enough. Okay, duration over direction. A lot to think about. Okay, the big takeaway from this evening as we come into the bell, yeah, the S&P futures, they may be massively unchanged. But people, I'm telling you, get ready to move in this marketplace. There's still a lot of risk, okay? It's all about how the financials are going to react, again, to interest rate cuts. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.